Equity is one of the strongest tools for wealth creation. It represents ownership, giving you a share in the growth and profits of a business. When you buy a company's stock, you're not just investing, you're owning a piece of that company's future. For most investors, equity simply means shares listed on the stock market. These shares can rise or fall in value depending on company performance and market conditions, giving investors both opportunity and risk. When companies grow, their profits increase. As a result, the value of their shares usually goes up too. This increase benefits investors who hold equity, allowing them to earn capital gains over time. Equity also gives voting rights in company decisions, depending on the number of shares owned. This means investors have a say, however small, in shaping the company's direction and policies. In financial terms, equity is calculated as total assets minus total liabilities. This formula shows what remains for owners after paying off all debts, a clear measure of the company's net worth. Investors often compare equity with debt. While debt requires repayment with interest, equity represents ownership without repayment obligations, making it more flexible and growth-focused. Holding equity carries risk, but it also brings the potential for high rewards. Stock prices can fluctuate daily, but over time, strong companies tend to reward patient investors. For long-term investors, equity is a key part of wealth building. Even small investments can grow significantly through compounding, especially when profits are reinvested. Equity can be held directly through shares or indirectly via mutual funds and ETFs. These options allow diversification, spreading risk across multiple companies and sectors. When the economy expands, equity markets often reflect that optimism. As businesses thrive, so do their shareholders, creating opportunities for those who invest early and stay consistent. Short-term volatility may seem intimidating, but disciplined investing in equity often beats inflation and other asset classes over the long run. Patience truly pays here. Another advantage of equity is liquidity. Stocks can be easily bought or sold, allowing investors flexibility without locking up funds for long periods. Global investors see equity as the foundation of a modern portfolio. It balances stability with growth, ensuring long-term wealth creation through consistent participation in economic progress. Investing in equity also encourages financial literacy. It teaches how markets move, how companies operate, and how patients turn small savings into meaningful wealth. Every successful investor learns to view equity not as a gamble but as a journey, one that rewards knowledge, time, and discipline. The earlier you begin, the greater the benefits. Ultimately, equity empowers individuals to grow with businesses and economies. It's not just about money, it's about ownership, growth, and taking control of your financial future.